What's going on, everybody? Steve Howe here. Just wanted to give you a quick update on the housing market and some new happenings that are going on here. So I'm actually in the neighborhood for an inspection for one of my buyers who's purchasing a new property for himself. And interesting thing happened when we went to book the inspection. We got this house under contract. It had been on the market for about 3 weeks. No offers from anybody else. They'd already dropped the price about $10,000 from their original asking price. And this price range, for those wondering, is between $450,000 and $500,000. So we went in, we made a little bit lower offer than asking. They countered back a tiny bit higher, and we accepted. So we went to book the inspection the next day, and lo and behold, my 3 preferred home inspectors, all but one, was booked out for an entire week in advance. Now, sometimes you'll see that in the busy months of, May, June, July, even August, or when the market's just super hot like it was 4 or 5 years ago during kind of the COVID-19 crisis and the interest rates that dropped to nothing. But I said, that's really interesting. Usually they're not booked out 3 or 4 days in advance. These ones were booked out an entire week in advance. So talked to one of my guys, and he told me that the last couple weeks, things had been kind of crazy. He'd gotten a lot of showing requests, kind of out of the blue. Things had been steady for a while, but now they seem to be picking up steam. And I said, well, why do you think that is? He said, well, we're seeing a little bit more multiple offers from buyers and on these listings that are hitting the market and that are priced right and that look good. And he said, I'm even getting requests from buyers and agents to attend their showings with them on the front end and not even wait until there's an accepted offer to kind of do a mini home inspection, because those realtors and those buyers are anticipating that they're going to have to go in and make an offer on a property without having an inspection contingency in the paperwork. Now, again, that's something that we haven't seen for a few years, since probably 2021, 22, and that was pretty common back then. We tried to get home inspectors to attend the showings with us and to figure out if there's anything really major wrong, if we had to include an inspection contingency, or if we could go without one. But I thought that was interesting. Now, what are the reasons for this? Number one reason is that the Federal Reserve is planning to be dropping their federal funds rate, interest rates here, in just about a week. And that is anticipated to be the first of many over the next 6 to 8 to 10 to 12 months. So we are hoping that what that means for mortgage interest rates is that buyers finally get a little bit of relief from the 6.5%, 7% rates that we've been paying the last couple of years. And what that's going to do, and I've been talking about this for really a couple of years, whenever the rates drop, a lot of people are saying, oh, now I'm going to buy. Now I'm going to sell that house that's really been too small for a few years for me and my family, and we're going to move into something bigger. Well, guess what? That is going to happen to so many people that it's going to create another mini flurry in the market, okay? We're going to have a lot of activity here late in this fall market, which usually isn't super busy, but we're going to see a lot more buyers out there, which means some more sellers finally listing their properties. And we're going to see some more multiples. We're going to see a little bit of bidding war action going on again. I anticipate if the interest rates do drop and continue dropping a couple more times through the winter, that we're probably going to see a spring market that rivals something of that 2021, 22 market where things were going 30, 40, 50,000 over asking price with no inspections and with no appraisal needed, or the buyer would guarantee that they would pay above and beyond an appraisal if it came in low. So things to be aware of if you are in the market for a new property, or if you're going to be buying your first one, or if you own a property now and you've been thinking about selling it for a while and you weren't sure if now was a good time or should you wait. I think we're on the front end here of a little mini boom, if you will. I think we're going to see a lot more activity the next few months. And into next spring, again, I think we're just going to see so many people finally get off the couch and go out there and list their properties and buy new properties. And really that's going to help both sides, because what has happened the last few years is, I know in my personal business, I have talked to so many of my past clients that are in a home right now, and they're locked into an interest rate of 3.5%, 4%. They're paying $1,200, $1,400, $1,600, $1,800 a month for their very affordable mortgage. And to upgrade to the house that they need or they want for their situation, it's going to double their mortgage payment. They're going to go to $2,500, $3,000, $3,500 a month, and they just can't afford that. So they've been waiting. They've been cramped in there. They've been biding their time, and they're going to finally get a little bit of relief on the payment. But what they need to watch out for is that everyone else is going to be looking for those good deals as well. That's one other facet of the market that we haven't talked about in a while, and that is investors. Investors have been parking their money elsewhere, whether that be bonds or the stock market or cryptocurrency. They've been trying to find ways to basically insulate their money from a real estate market that's been a little bit shaky the last couple of years. And I know locally here in Minnesota, we have still had appreciation of about 2, 3, 4% year over year, where prices were the previous year. And nationally, it's been about the same. There are certainly markets that have taken a dive, 3%, 5% year over year, some markets even 10% down. But by and large, the real estate market has been steady enough, and there have been enough people that have been buying and selling that we haven't gone through that crash that people have been talking about and some doomsdayers have been hoping for, honestly, which is a good thing. We don't want a crash. For anybody wanting a crash out there, go back and watch the movie The Big Short. Look at some of the stories that they talk about. Yes, they're fictionalized characters, or caricatures, if you will, but those were real people. I was in the real estate market in that time, both as a realtor and a home buyer myself. And it was sad. It was sad to see the properties in such bad, poor shape, but you forget that the properties are just a place for people to go and people to live. And so when you see properties in such bad condition, you think to yourself, who was here that's no longer here? And where are they now? What is their story? What's their situation? Are they getting through it? So anybody out there, I hope we have that crash, Steve. I hope we get those foreclosures so I can get them at a good deal. Just remember, those are impacting real people's lives, and it's not necessarily a good thing for the overall health of our economy and our country and the world at large. So that's about all I got for today. If you have any questions for me, drop them down below. What's your real estate market like? Are you guys going through a steady appreciation like we have? Do you have a crash in your market? Are you seeing multiple offers like we're about to see here? So love to know what you guys think. And as always, thanks for watching. We'll see you guys in the next one. Peace.